Welcome back. Today we are tackling tax reform changes to the itemized deductions. Essentially, all people are talking about the changes the tax reform made to the standard deduction, and almost just as many are forgetting that doubling the standard deduction will affect other areas of the tax return, and not necessarily for the better. For instance, with the standard deduction doubling, it becomes harder to benefit from the itemized deductions. For itemized deductions only start to benefit the taxpayer's tax return when the itemized deduction exceeds the standard deduction. Under the previous law, the threshold was $6,500 for single filers and $12,000 for married filing joint filers. After the tax reform, those amounts increased to $12,000 for single filers and $24,000 for married filing joint filers. While this change will reduce the number of taxpayers benefiting and therefore claiming itemized deductions, it will not eliminate them altogether. If you would like to learn more about how the standard deduction compares to the itemized deduction, refer to the webinar specifically designated to that topic. Okay, so let's go through the changes affecting the years of 2018 through 2025 due to the tax reform. I thought taking an old form and making changes on it as we go along is going to give us a great overview of how much actually has changed. The first change is to the medical deductions. This change affects only the years of 2017 and 2018. So after that, it will go back to business as usual. The tax reform for the time being reduced the 10% AGI gross income threshold to 7.5% for regular and AMT tax, therefore increasing the deduction allowed. The second change is to the state and local taxes. A new limit is set of $10,000 on a deduction for state and local taxes, including property and income or sales taxes. This limit is reduced to $5,000 if the taxpayer files under married filing separate status. The third change is to the home mortgage and interest deduction. Interest deduction on the taxpayer's home mortgage was reduced from indebtedness limit of $1 million to $750,000, or $350,000 for taxpayers filing under married filing separate status. Also, in most cases, eliminating the deduction for interest on home equity debt, with the exception that the debt is used to buy, build, or substantially improve the taxpayer's home that secures the loan. The fourth change is to the charitable contribution deduction. Allowable charitable contribution deduction was increased from 50% of AGI to 60% of AGI limit, and taxpayers are no longer entitled to deduct payments made to college or college athlete departments in exchange for college athletic event tickets or seating rights at the stadium. The fifth change is to casualty and theft losses deduction. Casualty and theft losses are eliminated with the exception for federally declared disasters. The sixth change is to itemized miscellaneous deductions. Essentially, all of this is now gone. Miscellaneous itemized deductions subject to 2% floor were eliminated completely. Examples of the deductions eliminated are certain investments expenses, professional fees, including tax return preparation fees, unreimbursed employee business expenses. This includes expenses a taxpayer incurs in their job that are not reimbursed, like supplies and tools, required uniforms, dues and subscriptions, including union dues, and job-related research expenses. Also, no longer allowed unreimbursed travel, meals, mileage, as well as home office deduction. Do note that this affects only employee expenses related to their job, not business owners' business expenses. Business owners report their expenses on Schedule C, therefore are unaffected by the changes to Schedule A, and are still allowed to deduct all of their ordinary and necessary business expenses, even if mentioned earlier. The seventh change is eliminating the AGI-based limit or reduction for certain itemized deductions. That was the last of the changes. If any of you would like to get up close and personal with everything that I have drawn on here, it will be posted in the article linked in the description. That would be it for the changes to the itemized deductions due to the tax reform. Until next time.